Hey Money Magnet, you want to see some price action analysis for the SPY? You do? I got you, let's do it. But first, let's start with the SPY. You can see here on the daily chart that it actually closed higher than the previous day high. So what does that mean? That means it's bullish. That's a bullish close, closing higher. It also hit my 200% Fibonacci level at 618.23, went to a high of 619.22, couldn't break out, and now we're seeing this daily chart candle. What do we see? We're seeing a doji with a higher close. Now, what does this usually mean? In the past, when I've seen doji candles like this, it usually mean a break from direction, a pause. Market needs to decide or wants to decide if it wants to continue to go up or continue to go down. Technically, this is still a higher close, but question now is, will it go higher? And when I see doji candles like this, for me on how to trade it is quite simple. I watched the range of the doji. As far as the intraday price action, how did Unco trade it today? There wasn't much that happened today. I had a 617 level. It broke down, which I alerted in my Discord. 617 failed as support, put in 615.5 in play. As you can see, and the initial drop, it didn't quite hit my 615.5 target. It bounced back, tested the resistance 617 before pushing down and eventually hitting the target. And then it looked like we formed some type of intraday W pattern when it took out the 617 level and recaptured it. And then it hit the 618.23 level. At the end of the day, it was pretty dreadful. Very low volatility. We can see in hindsight how simple it was to trade, but trading this in real time was like watching paint dry. Hence, the doji candle that we have on the daily chart. Low volatility. Let me see the volume. That's strange, you see. The volume was higher than usual at 92.48 million. The last few days it was a little lower, 86 million last Friday, over 78 million last Thursday. So it was a little bit high today, but it didn't lead much. I mean, higher highs, but intraday it was a doji, it was a chop. However, even though today was meh as far as intraday trading goes, the good news is we have a good setup for tomorrow. Because like I said, when we see these dojis, it means a pause, and the next candle usually gives us some type of direction. So we watch the range. What's the range of today's doji? 615 up to 619.22. 619.22. So we watched the break of that range. I have a fib level at 618.2 and then the high at 619.22. If we can take out those highs and those levels, it's a good chance we pop up to 620 plus. And I don't have a macro level fib level until 644. Can you imagine the SPY gets to 644? That would be crazy. But if it does happen, I'm not going to argue with the price action. I'm going to trade it and do the best I can to make the most of it, and to continue to make new all-time highs, because that's pretty much what SPY is doing right now. 618 and 619.2 must clear to send us to new uncharted territory. As usual, if it's pullback time, we need to see that false breakout setup. We need to see breakdowns of support levels fail. I'm watching the range of that doji. The bottom is at 615, and then we also have the fib level around 613.23. I'll round that down to 613. If we can break down 615 and 613, I would be bearish in favor of very, very nice pullback. And if we get some volume behind it, it could be a rug pull. Stairways up. You see the stairways up? It's when we just get these weak moves to the upside. You see? Small candles getting smaller, looking weak. For all we know, this higher volume could be the market maker setting up for a pullback. We don't know yet. We shall see. But if it is pullback time, it will come in the form of 615 and the 613 previous all-time high breaking down as support. Pay attention to those two levels. If you're a bear and you see those two levels fail, you want to go short. You want to enter puts. But if we're above 615 and we clear 618.2 and we clear 619.2, we are heading up to new all-time highs. Let's move on to triple Q. This is the 4-hour chart on triple Q that I'm looking at. It's also consolidating a bit. The chop range that I have right now is 552 down to 550 with 548.8 below. I would be bearish if both 550 and 548.8 fail as support. 550 is a fib level, and then the 548.8 around that area seems to be some buying pressure. You can see by these wicks, but that is also a fib level. So if we can break down those two levels, I would be bearish. I would look to short. I would definitely favor more downside. 547, 545.8, and 544 or lower would be in play. But if we are to be bullish, two levels I need to see clear. 552 and 553.3. If those levels clear, I think we head up to 555 plus. It'd be a pretty nice move. So let's, like I always say, let's wait for the price action to give us the setup, and then we react to it. Tesla, this is looking bearish to me. With SPY and QQQ, you notice I'm a bit neutral on those, because even though it's overall bullish and I'm still overall bullish, you know, it's looking a bit weak. But Tesla, I can say with a bit of confidence that it's looking bearish. Why is it bearish to me? Because it broke down 320.5, broke down that level, and now where do we close at? We close at 317.6. We can see in the post market is at 310.49. It's gapping down. Did some news come out? Probably. Yeah, some news came out. But as far as the price action goes, Unco is bearish below 320.5. We got the breakdown. Now we're gapping down. What is the next critical level? I have 309.3. That's a fib level, and 308. That's based on this green down trend line. If Tesla breaks down those levels, or even gap down below those levels, that's bearish. I would favor more bearish continuation. We're likely heading back down to 300, maybe even back below 300. For me to be bullish again, that 320.5 must recapture. 317, 319, and 320.5 must recapture. If it does, I would favor a 10 to 20 plus dollar move back to the upside. But that's the pivot level that must recapture, because if it doesn't, the breakdown stays intact, and Uncle Chartist would favor more downside. Here is NVDA, still overall looking bullish. It's looking weak, but overall looking bullish still. We'll have to zoom in a bit. I want you to notice how that red candle, today's red candle, it's within the range of last Friday's candle. Can you see that? You notice that? This is what you call an inside candle setup. It's when the child candle, which in this context is the red candle, we call this the child candle, is within the range of the preceding candle. We call that the mother candle. In this case, that would be the green candle. So based on this setup, that tells us we are in chop mode, but we have a chop range. The chop range is the mother candle, 155 up to 158.7. So what does this mean? This means as long as within that range, 155 up to 158.7, we stay neutral. There's no setup for calls, there's no setup for puts. We stay neutral. However, the setup for this is once we break the range, that's when we make our move. If we clear 158.7, this setup, this chop ends bullishly. And if it ends bullishly, that means to enter calls. Above 158.7, the chop ends bullishly, and 160 plus should be incoming. However, the low is at 155. So I do have support at 157 and then 155. If we break down the support of 155, the chop range ends bearishly. And if it ends bearishly, what do? We enter puts. We bet to the downside. So watch that chop range, 155 to 158.7. Above 158.7, we can expect more upside, more new all-time highs. But if we break down 155, we can expect a very nice pullback. We have lots of gap. Look at these gaps. Gap, 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 gap. Lots of reasons for NVDA to drop, but we can't get ahead of ourselves. We need the right setup. Yes, there are lots of reasons for NVDA to drop, but we need the right setup, and that is the breakdown of 157 and 155, and preferably 153, because 153 was a previous all-time high. So if we can break down 153, that would be a major false breakout setup. We could get a regular healthy pullback, but below 153, I can say with confidence, I would definitely be bearish. Moving on to coin. Here is coin. I got this on the 4-hour chart. I do have a level at 348.6. Coin actually broke it down. It's trying to break it down. And I tell you this, as long as below 348.6 and I have the next support at 347, if it can break down those levels, I would favor a much deeper pullback. This is kind of look like some type of head and shoulder, left shoulder, head, right shoulder. We could be having the neckline around 343.5. So I would definitely be bearish or favor a test of that level at least. But below 348.6, bottom line, I'm bearish on it. If we are to favor a bounce above 348.6 and above 350, I would favor a bounce back up to 355, 358, 360, and the fib level at 361.3. But watch out for coin. This is a very volatile ticker symbol. I love coin. And here is the VIX, still overall looking bearish. You see they once again tested that fib level at 17. Last Friday they hit it. You see the wick, and it was selling pressure. Today they opened around that area, and once again you see the red candle, selling pressure. So overall, the bears are still playing defense. But the question now is, can they play offense? For me, offense would come in the form of breaking down that 16 level and that 15 fib level. They're playing defense by defending the 17 level. Good, but they need to play offense. Break down 16 and 15, we can get more downside. For bulls to turn this all around, we can see how much the market makers are defending that level. So the bulls need to recapture 17, and then I would be bullish and favor 19 and 20 plus to be back in play. All right, thank you so much for listening to me. I really appreciate it. It was a good amount of information, but I feel in my heart it was good information, and I believe in my heart as well that sheep style is the best trading style. We trade it unbiasedly. I know like today, some days is volatile, some days is not volatile. Today was not volatile, but I tell you, after contraction comes expansion. Today was a day of contraction. Volume was okay, but volatility was shrinking, movement, price range was shrinking. But when it comes expansion, everything gets bigger. Everything gets bigger. And before the expansion is the contraction. But after the contraction comes the expansion. So you stay patient and you will get paid. Bah!